All right, guys. Hey, what's going on? What's going on? Welcome to Wall Street Wednesday. This is welcome to Wall Street Wednesday. I'm checking my dates. Today is what? Today is October 20. What's today? The 27th? 28th. I apologize. So welcome to Wall Street Wednesday, October 28th. The market closed. Looks like right now we're down about 941 points. The market sold off on the close, which is not a good sign. I got a lot to talk about today, a lot of things to go over. Hopefully you guys saw the pictures I posted, so I'm going to talk about that a little bit. There's a lot, so hopefully I can get to all of it. I'm just going to wait a few minutes for people to actually join. Lance, how are you, sir? So hopefully everything's going well. Hopefully you guys are making money. Hi, how are you, sir? Tough environment out here, but I'm going to talk about this in a lot of detail today in terms of my own account, what I did, what's going on, and hopefully that will help you guys to make money. Now, where are my pictures? Oh, that didn't work. So where are my pictures? I don't know where my pictures are. You know, I posted some pictures for you guys. Is that it? Oh, I found them. Okay, good. All right. So just give it a few minutes. I imagine a lot of people that normally show up are trying to close out, wind out positions, looking for earnings. Bloodbath in the market this week. Yeah, what's today? Today's Tuesday. Wednesday. I'm sorry. You're calling it a bloodbath this week. And the week's not even over yet. So pretty interesting. So a lot to talk about. So let me do this first. I got you guys on here. I think I'm just checking. I'm checking. Bear with me a second. No, that's not what I'm looking for. Stop that. Where is it? It's here. Let's see. Bear with me a second. And yeah, I didn't write it up. All right. So there's three of you here, so let me actually start talking, and it's on the recording, so we'll get to it a little later. So this past week, I got stopped out of basically all my positions. So let me go back. When I was a much younger man, and had started trading, I had developed, some of these strategies I was using back then. So I was using the earnings momentum strategy. I was using breakouts. I was trading off of new highs, looking for stocks hitting new highs. And so making money and everything was going well for me. I can't remember what market it was, or what environment, another environment. But as I had told you, I was always a believer in, and still am, in cutting your losses. So I would put stops on things. So I'm going back. I started trading my own account, my hedge fund. I started trading that in 1989, 90. So I'm going back some years. But anyway, one week I'm trading the market. I've got my positions on, and probably like most times, 4 or 5 positions, 6 positions. And as you know, in one of the strategies I taught you guys is I look for stocks that are setting new highs, looking for them to break out, maybe on earnings, maybe on volume, but I'm, basically stocks trading at or near their new highs. So long story short version, came into work and I got stopped out of all my positions. So I'm like, wow, that's interesting. I've never had that happen where I basically got stopped out of everything at one time. So like always, I was looking for more stocks to buy, couldn't find anything to buy. Everything I got stopped out of. Long story short, my stock positions were telling me that the market was moving into a bearish market. And I've been following that strategy and using that strategy ever since. And when I have positions on and I get stopped out of all my positions around the same time within a day or two, it's telling me that there's major weakness in the market. Think about it. So if you just stopped out of one stock, it means that there could be something going on with that particular industry or that company. Again, now understand, the stocks I'm buying, the stocks I like, are the ones that are at or all-time or near their all-time highs, which means that the market loves the stocks. The stocks are doing well. Many of these stocks will actually hold up during a sell-off, the top ones, because investors still want to own them. So for me to get stopped out of all my stocks on the same, basically within a day or two of each other, it's a signal. So when I got stopped out of all my positions between last week and this week, my mind went towards, okay, here we go. Now, I'm not saying we're in a bear market, although, as you guys know, France is locking down. Germany's going to a lockdown light. The world is moving into what they look at, which could be, and they're saying, the second wave of the coronavirus, which could be even worse than the first wave. So with that said, I know it's putting pressure on the market. And so again, not surprised that the market's down as much as it is right now. Not that my indicators told me that it was going to be sell-off, but again, the fact that I got stopped out of all my positions. Now I want you guys to think about this. If you guys were using stops, which is what I always tell you guys, use stops, or you're hedging your positions, you're either making money on your hedges or you got stopped out of almost all your positions. The other thing to check on is a lot of your stocks might be trading at what we call major support levels. So again, all I want to say to you is, and this is where I'm leading up to, and I'll talk about this, is when you get stopped out of all your positions at one time, and to figure that you might be diversified in 3 or 4 different, 5 different companies in different industries, different sector, when you get stopped out of all your stocks basically on the same day or around the same time, it's telling you that the market has a broad sell-off. So that's one of the things I want to talk to you about. So again, guys, in this environment, volatility is there. Volatility is your friend. But remember to hedge yourself or use stops. Now, the other thing I'm going to tell you is, remember now with this volatility, you can use your synthetics. Those of you who understand synthetics, go for it. I've had a number of emails over the past couple of days this week that people don't understand options and how they work. So if you understand options and how to hedge with options, use it. Now's the time. Volatility is here. If you don't understand it, don't do it. Just basically use your stop loss orders. Stop loss or buy loss. Now, the other thing I wanted to bring up is, and I'm going to share some pictures with you guys, and I'll explain to you what I'm looking at. So let's see. That one is what? That one is, I'm just looking. I think, all right, that one you're looking at, I got it off the NASDAQ website. So you're looking at NASDAQ or NASDAQ.com. And what you're looking at is for the last 52 weeks, the number of stocks hitting new highs and new lows on the New York Stock Exchange. And what you'll see is that you had 5 stocks today set new highs and 55 stocks set new lows. They call this breadth of the market. And one of the things I look at is how many stocks are setting new highs. In a bullish market, the number of stocks setting new highs will dramatically outpace the number of stocks setting new lows. Near the end of a bull market run, the market can continue to run, but you'll notice that the number of stocks setting new highs start to decline and dwindle. And in a bear market, we know what's going on. So what I'm showing you right now, and you can see it, is that you're looking at today. This was what I pulled up before I came down here. You can see the time. This was 2:15 p.m. Eastern Standard Time, so basically an hour and a half before the market closed. And you basically had 5 stocks setting new highs on the New York Stock Exchange. And on this particular one, this is NASDAQ. And on NASDAQ, you had 8 stocks setting new highs and 83 stocks setting new lows. You know, it's kind of, I know it's a cliche when it comes to trading. I know that everyone says it. You know, the old cliche that the trend is your friend. But you can kind of see what's going on here. And by the way, this is just for today. So what I'm going to do now is I'm moving to, and I'll show you the full list. This came from barcharts.com. And what you're looking at is all of the stocks today that have hit an all-time high. You also have all-time lows, but this is all-time highs. So these are all the stocks today that hit all-time highs. You'll see that today on the 28th, you had 19 stocks so far on all the exchanges here in the U.S. hitting new highs. Yesterday on the 27th, you had 48. So let me go to a chart that's a little easy for you guys to read. So you can see it. Today, there were 19 stocks between the three exchanges, New York, American, and NASDAQ, that set new highs. Yesterday it was 48. You can see what's going on here. You can see that the overall trend, you can chart this. Bar charts, which I got this from .com, actually will actually give you a chart. You can actually chart this out and see what it looks like. So this is major for me. This is something that I think that all you guys should look at. And again, all you're trying to do now is just position yourself ahead of what's going to happen in the marketplace. This is not telling you that the market's going to sell off, but again, if you have stocks that are not setting new highs, you have more stocks setting new lows and new highs, it's telling you what's going on in the marketplace. Remember, the market is a forward-looking mechanism, all right? So when you have more stocks setting new lows than new highs, the market is telling you it's catching its breath, it's timing out. So that's what you're looking at on these charts, these graphs, new highs and new lows. Now, one other thing I also want to bring up while I'm doing this, bear with me a second. I got to find a picture of it. I didn't put a picture up. So the other thing too is, for those of you who follow and understand my VIX strategy, VIX, the VIX strategy. So let me come out of this for a minute. I'll come back to it. My VIX strategy. My VIX strategy, again, is I chart the VIX. I use a 20-day moving average, a 20-day Bollinger Band set for 20 days and 2 standard deviations. As we had talked about before, I tell you, when the VIX penetrates the upper Bollinger Band, it means that we've reached an extreme level. Again, I'm not trying to get too involved in the math, which I'm not. And what I mean by that is, in math, in the market, there's what we call the reversion back to the mean. So if this is the mean and we go past it or go below it, the assumption is over time it's going to revert back to the mean. If it goes too high, it's going to revert back to the mean. Market go too low, it's going to revert back to the mean. So right now, the VIX busted through the upper Bollinger Band. Again, set for 2 standard deviations, that means we're in the tails. So right now, the market's in the tails. So in other words, it's oversold, and we can expect for this market to actually have a pullback, or in this case, a rally back from this. Now, as you guys know, I tell you that one of my strategies is I will buy the market when the VIX penetrates the upper Bollinger Band. I did not do that today. And the reason why I didn't do it today is because the market has been selling off for the last 3 days. We penetrated the upper Bollinger Band on Monday. We're above it again on Tuesday, and we skyrocketed above it today on the 3rd day. So what I'm going to do now is I have the patience of Job. So I will wait and see what's going on. I still might buy the market, and typically I'll buy the S&Ps. I'll buy some options on the S&P 500. But right now, with this 2 or 3 day sell-off, I'm not sure if we've hit near-term bottom of support. But that's how I use the VIX. That's what the VIX is telling us. The VIX is telling us right now that the market is oversold. But again, I don't know when the bounce is coming. And the reason why, again, for those who came late, the reason that's going on right now and what the market's looking at is the market's a forward-looking mechanism. For those who don't know, France is shutting down. France is shutting down. Germany shut down. They call it the shutdown light. So they have a version of their shutdown. They're shutting down the country, but they're calling it a light version. All right. We're at record cases here in the U.S. What it looks like is that coronavirus is going to have a cruel winter for us. And what that means is, I'm just reading Christian Post. What that means is forward-looking market. If these countries are shutting down, it means that businesses are shutting down. If their businesses are shutting down, that means that there's going to be less revenue for these corporations. So again, we're forward-looking. One of the things I keep telling you guys is we have to develop our ability to actually read the newspapers and understand how to make money from that, or how to not lose money from that. So what you're looking at now is what you're looking at now is you're looking at a market that has uncertainty. As Christian wrote, it's a roller coaster time. Volatility is here, guys. If you're short-term trading, my advice is take your profits. Don't hold anything overnight. The only thing I would hold overnight right now, believe it or not, is if I had some profits on the short side. I have not had time to look at the short side of the market, but I will look at shorting some things. Here's my heads up on the short side. If you're looking for things to short and you're not sure what to short, two places to look. One, look in the recent IPOs over the last 30, 60 days. Look at the IPOs that are trading at their IPO offering price or slightly below it. Look for those. Because the deal is, we had a nice run in the marketplace, and if these things couldn't hold up when the market ran, when the market comes under pressure, they're coming under pressure. That's the first place I look. The second place I would look if I were you is I would look for companies that are actually setting 52-week lows. Again, we've had some runs in the market over the last basically 3 months, all right? The Treasury Secretary Mnuchin and the Trump administration, they're doing nothing but literally they turned on the faucet and they're pumping money into the system. Money's just pouring in. But the thing I need you to understand is, as that money's pouring in to try and save the system, what you're looking at now is, if stocks, when we pump money into to save the system and the system actually was going high and the market was going high, if your stocks that you're looking at didn't participate in a bull market, what makes you think they're going to participate, go higher in a bear market or a sell-off? So those are the areas I'd look for. And those are the areas I'm going to look into. Again, I'm going to look at the IPO market over the last 30 days, 60 days, see what didn't work. I'm going to take a look at the 52-week lows. Now, one thing I will remind you of, and I tell this to people all the time, for me, I'm not interested in shorting a $2 stock. Remember, when you short a security, the most you can make is if the stock goes to zero. You short a $2 stock, the most you can make is $2. The challenge you run into is that what happens if that stock gets a takeover offer? Xilinx just got an offer from, AMD. What happens if stock gets a takeover offer? Somebody looks and says the stock is so cheap, we can buy this stock and we can buy those assets at a discount because the stock is trading so low. And if that happens on a $2 stock, it could run to $4, $5, $6. I've seen it happen to a number of people. I've been fortunate it didn't happen to me, where they shorted a cheap stock, it went down and they were making money, but then a takeover offer came because the stock was so cheap, the assets were so cheap, and the stock actually ran and the investor ended up losing money. All I have to say, I'm looking for stocks that are at their 52-week low. I'm looking at stocks that are at least above the $20, $30 range. I need some fat in there so that when it sells off, I can make money. Now, of course, if it's a $100 stock, $200 stock price, it's not an issue. But I would not go out and short a $2, $3 stock. All right? If the stock's already at $2 or $3, these are the first one to tell you, you missed it. Move on. You missed it. All right, now let me move on also. We're in the middle of earnings season. And as you guys know, I usually call earnings season money-making time. Well, earnings season this time is not money-making time. And the reason being is that the stocks that are beating the numbers and the estimates are not holding their gains. All right, went and looked at it. I've been looking at it for the last 2 or 3 days. You have stocks that are beating their numbers, beating the estimates, and selling off. Now, some of them are selling off because some of them will not even give you projections for the current quarter they're in or for the rest of the year because of the coronavirus. So they're not making any forecasts. They're not giving any projections. So one of the things we look at is, especially in this environment, not only what the stock did the previous quarter, but we want to have a good idea what we think is going to happen going forward. A lot of corporations, and by the way, a lot of the corporations that are beating the numbers, they're beating numbers that they had lowered from basically 6 months or a year ago, where they lowered the numbers because of the pandemic. So understand, if you lower the bar and then you beat it, is that really going to move the stock price higher? I don't think so. Wow, my beard looks crazy. I forgot to comb it this morning. It's been a busy morning for me. All right, don't judge me by my appearance. I'm still a smart guy. So again, that's what's going on in the earnings market. Companies are not beating the number. Even when they beat the number, there's no follow through. I would be leery. As you saw, again, Netflix, a week ago beat the numbers. Their subscribers were a little light, but everyone raised the numbers and the stock still sold off. Stock sold off big time. Apple's due tomorrow. I believe it's tomorrow on the close. But again, that's what you're looking at. So in this environment, be nimble, be careful, be quick, hedge, stops, be disciplined. This is not the time to freelance. Be disciplined. If you're not sure what to do, as the market's selling off or these things are happening, if you're not sure if you should buy or sell, the safest place to be when you're not sure what to do is to go to cash. Let me say it again. There's nothing wrong with sitting in cash. Several years back, I had a client. I'm going back. I'm going way back. I'm not going to tell who the client was. But I had a client and 9/11 hit. We were already in a start of a recession before 9/11 hit, for those who don't know. 9/11 hit, the market just sold off and stayed down, as you guys know, the whole 9 yards. One of my clients called me up and said, Mike, we don't own any stock. We're sitting in all cash. We don't own anything. How come we don't own any stocks? And I said to the client, I said, you're not losing any money. I said to the client, I also knew the client had, a couple $100,000 in money and mutual funds, And I said to him, how much you down in your mutual funds? He goes, well, I'm down big. I said, you're not down with me. We're flat. You haven't lost a dime with me. You're not going to lose any money in cash. Let's sit here until we figure out where to go. And he thought about it and looked at what was going on and said, wow, good job, Mike. Thanks. So my point to say this to you is, you don't have to trade, especially if you can't find anything. If you have certain strategies and you can't find anything to buy or sell to make money in your strategy in the market environment, 2 things. 1, don't do anything. Go to cash. Be patient. 2, use this time to develop another strategy. All right, that's all. And for me, developing strategies is nothing more than studying time and looking how the stock reacts and seeing if I was right in my projection in terms of where I thought the stock was going to go up or down. I mean, I'm making it sound simple, but it's that simple. All right, you want to know how a stock reacts in the sell-off? Look at how the stock reacted today. You want to know how the stock reacts when the market moves up? Look how it reacts when the market moves up. It's really that simple. Get to know the companies. But when you're not sure, move to cash. All right? Part of your goal, your first goal is to make money in the market. The second goal is not to give it back, not to lose your principal. All right. I beat that up enough. I'm going to leave it alone. Now, I apologize. I've been busy, been really swamped. And before I forget, I will not be on the call next Wednesday. I have a family project. The only time we could do it was, of course, on a Wednesday. So next Wednesday, I will not be on the call. I'll send out a notice, but next Wednesday, there will be no call. I don't like that. I don't like missing with you guys, but next Wednesday, I will not be on the call. All right. Now, and again, going through my checklist today, understand what's going on right now. Germany's shutting down. France is shutting down. The coronavirus is picking up around the world. Let's go and talk about our commodities market. If you looked today, a couple things are real interesting. 1, most currencies around the world were down and the dollar was up. For those of you who've had me in class, with all this financial turmoil, what do we call what happened today? We call that a flight to quality. All right? When investors are not sure what to do and where to go around the world, they literally raise cash, they buy, I'm sorry, one of my stocks that I'm still long reported earnings. They beat on earnings, they beat on revenue. I got to go look later what the stock price did, so I got a little distracted. I apologize. So anyway, again, so I got distracted. All right, so around the world, when there's financial stress, what investors do in those particular countries is they liquidate their positions. Now, I'm not talking about mom and pop. I'm talking about institutional investors, large investors. They go to cash in their country. They sell their country's currency. They buy the dollar, and then they go long treasuries. That's flight to quality. Now, I haven't looked at the treasury prices because I was too wound up looking at the currency, and I'm going to it right now. Bear with me. I'm in barcharts.com on my system. Excuse me. So I'm going to my futures market. Bear with me a second, guys. I'll be real quick. Futures market overview. I'm going straight into the futures market. I'm going to my currencies. And as I go through my currencies, oh, bear with me a second. I got to put the performance up. Price action for today. As I go through this, I look and the dollar's up. Nice move on the dollar. Every other major currency except for the Japanese yen is down against the dollar. All right, the dollar went up. Now the other thing, before I forget, the 30-year Treasury bond up. There's two of them, futures, up. The 10-year Treasury, up. The 5-year notes, up. The only thing that's flat right now is is the federal funds rate. The euro dollar is actually up. All your debt instruments are up. Why? Flight to quality. Now, one other thing I'm going to bring up while I'm sitting here, and by the way, my other screen's over here. You guys know, you have more than one monitor. Now, the other thing I want you guys to realize, think about this. Every other major commodity today was down, and down big. I'm looking at the grains, all of them are down. I'm looking at crude oil and all the energies, all of them down. I'm looking at gold, silver, copper, all of them are down. All right? I'm looking at a lot of the softs, most of them are down. So why is everything down? Tie it together, guys. Tie it into one big knot. The reason why these other things are down is because they're based on the dollar. They're dollar-based commodities in our market. And so believe it or not, when our dollar gets stronger, those commodities become weaker in price. A lot of our commodities are being purchased by foreign investors. So again, if you tie it into a nice, pretty bowl, the thing that you realize is that everything got more expensive. All our commodities got more expensive for the rest of the world once our dollar took the hit. Once our dollar rose. Our dollar got strong against all major currencies. Their currencies dropped. Everything that they buy in dollars now has become more expensive. That's why I believe, again, one of the things that's tied into the sell-off. I'm out of breath, but the reason why I'm out of breath is because I always say this to you guys. I'm going to say it again. None of these markets are an island by themselves. They're interwoven. There's a relationship with them. There's a correlation. Sometimes the correlation is strong, sometimes it's weak. But what happens in one market can affect other markets. So understand that. Understanding that will help you understand where you can go to make your money, how you can make your money. All right. So that's where we're at there. I do apologize again. Quick reminder, I don't have my commodities update. I went through commodities all weekend looking at this. I did not go long short sugar. I'm looking at now sugar's up, so it's up a little higher than where I would have shorted, so maybe that's a blessing that I didn't get short. Again, I got so busy with the actual equities and what was going on there that I did not do that. Now, the next part, the next half hour is directed towards something that I really, really want to spend some time with and really go over. And I put some slides up for it. Before I go into the slides, the pictures, let me say this. Let me give you a little background. Right now, we're sitting here discussing on how to make money in the stock market. All right? How to trade, how to make money, how to put some money in your pocket. We're talking about how to make money. For me, I understood and learned at a very young age through a lot of hard work how to make money in the stock market. At one point, I made more money in the stock market than I thought I would ever make in my life. I made more money in the stock market than I ever made being a pro basketball player. For those who understand or know a little bit about me, know I had a brief pro basketball career. I made more money trading the market than I ever made from basketball. But a lot of things I learned in basketball carried over to the market. That's another story in itself. But here's where I'm going. I learned how to play basketball the same way I learned how to trade, and that was I started studying people that were making money in the market. I started studying people that were doing it and having success. I studied them. Sometimes they knew I was studying, sometimes they didn't, but I studied them. I did the same thing how I learned how to play basketball. I would study the better players. I actually studied the better players and the worst players because I felt like I could learn from the bad players on things I didn't want to do. So I've always, that's my personality. That's who I am. So when I went to Wall Street and I started making money in my own account and trading, I made a major error. And that is, I mistake making money in the stock market for creating generational wealth or wealth for my family. I thought making money was creating wealth, and it was the furthest thing from the truth. So I'm here to talk a little bit about this. Now, I wish somebody had pulled me to the side when I was in my 20s making the loot I was making and had this conversation with me. The challenge I had was I didn't really know what I would call anyone that was really generating what I call generational wealth. And the ones who were doing it, a lot of them aren't talking about it. They're really tight-lipped. So I'm making money, but I'm not creating wealth for my family. So I'm gonna put up a chart now. So the chart I'm putting up, it's hard to see. I'm putting it up on my computer screen. And for those who, if you want to see any of these, just email or text me, whatever. I'll send you I have no problem sharing the link. You can actually go to their website. So I didn't create this. I got it from a website, but it's pretty powerful. So what you're looking at here is on the left column, which you can barely see, it has the net worth. So the top one right here, the top line is net worth of 10 grand. All the way down to the bottom of this chart, the net worth is, on the y-axis, is $1 billion. Let me go up to the 10 grand, 100 grand one. The 10 grand, 100 grand one, again, I'm breaking this down. Please don't be offended if it touches you that way. This is for me, my kids, and one of the things I'm constantly talking about. When you look at the lower net worth, the 10 grand, the 100 grand, the biggest asset they own is their residence. The second biggest asset they own in terms of the 10 grand net worth is their vehicle. If you look at the 100 grand, and that's the orange, you'll notice on the 100 grand, you start looking at retirement accounts, but your house is still their biggest investment. Now, you can study this on your own without me explaining it to you. You guys are all bright. But let me say this. I'm now going to the bottom one. People with a net worth of 1 billion. Look at them. 100 million and 1 billion. Look at the bottom two. Look at what their biggest asset is. I'm going to read it out loud to you. I got to hold this up so I can really see it. It says their biggest asset they own is their business interest. Most multimillionaires or billionaires are not liquid and have most of their wealth in business interests. So before I go any further, here's my comment to you. Oh, by the way, stock market, stocks. Stock market's the light blue. You'd notice that the amount of stocks and mutual funds that the higher net worth own is substantially larger than what the lower net worth is, but still it's not the bulk of their assets. So my question to you guys is, what businesses do you own? What businesses are you buying? All right? You see where it is. If your car in your house if you figure that your car in your house is going to be how you get to become this, increase your net worth, then I apologize to you beforehand, but you're going to have a hard time. All right? At this point in your life, as you're accumulating that wealth and you're making money in the stock market, you're making money trading, that's not the end. It's just the beginning. Take those profits and reinvest them into businesses that you can own. You can be a passive owner. You can go into the private equity market. There's things that you can do where you can own businesses and be a passive owner. You don't have to be an active owner. But the key is your net worth is directly tied. I apologize for hitting the thing. Your net worth is directly tied to the number of businesses you own. All right? That's what I wanted to bring across. Now, I have some other ones here for you. On this particular one, again, On the far left, on your far left that you're looking at is middle income. The middle one is upper income. And the far one on the far right is ultra rich. And you'll see that the ultra rich, well, let me go back. For the middle income, you'll see that on the left, the bottom purple, their largest asset, again, is their residence. Their second largest asset is their retirement account, their pension account. As you move to the right and start moving up, notice that the green boxes are getting bigger. And the green box is the business, equity, and other real estate, not their home. Are you starting to follow what I'm saying here? What I'm saying to you is that, yes, make money in the stock market. I made a ton of money in the stock market. I made more money in the stock market than I thought I'd ever make. But guess what I didn't do? I didn't accumulate those other business interests. I didn't do it. All right? I did not go out and acquire those. What I'm saying to you guys is, as you make money in the stock market, and you're going to keep trading stocks and owning stocks, as you keep making money in the stock market in your retirement account, go out and buy other assets, businesses. You can be a passive owner. Real estate, you can be a passive owner in real estate. But you need to buy other assets. Your net worth, again, as you can see, is going to be based on your business, equity, and other real estate. When they say other real estate, you know what they're talking about. They're talking about investment property. Now, I don't want to beat this thing up, but I'm going to move on to one more. Now, again, hard to see, but let me read it to you. It says concentration of stock ownership by wealth bracket. On the far left, the top 1%, 40% of their wealth is coming from the stock market. And you notice that it says here, and it's small to see, but the top 20% of wealth owns 93% of the stocks in the marketplace. Again, look at the bottom 80%. 6% of the net worth is in the stock market. That's it. So, one, you guys are moving in the right direction. That's the reason why you come to this, my Wall Street Wednesday, because you are looking to make money in the market. Two, it's only the beginning. Whatever wealth you generate in the stock market, take some of that wealth and go into other businesses. Become business owners. I wrote a book on how to analyze private equity. When you qualify for private equity, start looking at some of those companies. Now, I'm not telling you it's going to be easy. I'm not telling you that there's not going to be things out there that you invest in that aren't going to work and you lose money. I'm not telling you any of that. What I'm telling you, though, is that that's where it starts. I got all these charts off of the internet. I'll have to pull up the name for you. Hit me in the DM, hit me on the private messaging to remind me, and I'll go actually find the actual site. I believe, hold on a second, bear with me a second. Gosh, I cannot remember. Oh, there it is. Visualcapitalist.com. Visualcapitalist.com is the website that I got this data from. I also follow them on Instagram. I follow them. All right. They have a lot of good information. They crunch the numbers and they put together some great infographics. David, you got that? So it's visualcapitalist.com. And they'll tell you where they got the data from. They put out what they call those infographics. Excuse me. They put out those infographics with all the information on it. So all I want you guys to realize, and I said this earlier, private equity, business ownership, real estate, yeah, they all carry risk. I know they do. And yeah, maybe you don't have time. That was my mistake. I felt like I had to control everything. I felt like if I was going to buy real estate, I had to actually go and monitor and handle the property. I didn't have time for that, nor I had the energy for it. Looking back on it now, 2020 hindsight, there were real estate REITs, there were limited partnerships in real estate, there's private equity real estate, there's private equity business. There's a lot of things I could have done, all right, that would have paid off. but I didn't do it. I didn't understand that. So that's for me to pass on to you. That's one of the things I share with my kids all the time. So again, what are you doing besides the stock market? What are you doing to create wealth for your family? What are you doing to actually create wealth that you can pass on to your family? That's generational wealth. And generational wealth comes from owning things. You can find partnerships. You can find other things. Become a passive investor. My book on how to make money in private equity talks about the things that you should look for when you look at a private equity company, which is the same thing I look for in a publicly traded company. But again, diversify and go into these other areas. All right, I'm not talking about diversify within the stock market. I'm talking about diversify and build your wealth. I don't know what else you need to see, and I'm going to go back to it one more time. I don't know what else you need to see when you look at that box on the right-hand side, that top green box. What else do you need to see? What else do you need to see when you look at this on this bottom graph, those blue boxes on the bottom to the right? What else is it that you need to see? So the question that you have to ask yourself is, what plan am I putting in place today that whenever the case, 5, 10, 20 years from now, 30 years from now, I'm going to have that blue box to the right. That's going to be me. Now, real quick, before I want to say this. All of you guys know who Warren Buffett is. There it is. Sorry about that, guys. I'm back. I was doing that. All you guys know who Warren Buffett is. If you don't know who Warren Buffett is, my advice is get off this call and start doing your homework, which you're not ready to invest in the market if you don't know who Warren Buffett is. But the thing I want you to understand about Warren Buffett. Warren Buffett became wealthy around age 50, 55, somewhere around there. And the reason being is because, as he talks about, the eighth wonder of the world is compounding. Warren Buffett was a long-term investor, and he let his investments compound and compound. The other thing about Warren Buffett is we all look at Warren Buffett and say we're going to be Warren Buffett and we're buying stock, the same stock that Warren Buffett is. You understand, and make sure you understand this. Warren Buffett, the bulk of his wealth came from Geico and American Express. Warren Buffett owned and still owns Geico. And he didn't own American Express, but he was the largest shareholder at one point. So when you look at it, Warren Buffett owned Geico. He owns it. All right? Again, that's the wealth we're talking about. He owns that business. What businesses do you own? The stock market's just the start. And what I say to you is use this. When you find stocks that work for you, when you find that you're making money in stocks and you can pick good stocks out, what it tells me is that you understand how a business should run and how a business can make money. When you understand how that works, why can't you go out and look for private companies to invest in? Why can't you? All right? Do not be put off by you're not smart enough. Do not be put off by you can't do this. Trust me on this. I say it with a smile on my face. I've seen some of the wealthiest dumb people you'll ever want to meet. But they were so dumb that guess what they did? They found something that worked and they just kept doing it over and over and over again. You don't have to be brilliant. You don't have to be bright. You don't have to invent anything. All right? You just have to have the ability to figure out where to put that money so it can grow. All right, it's quarter till. I did a lot of talking. So I'm not trying to well, let me back up. I did a lot of talking, so I wanted to see what you guys, if there's any questions or anything. And the other thing I'm doing is I'm actually going to check and see how this stock did after the earnings came out. All right, so let's see. Wow, so here you have it. So my stock, so I'll tell you now, you guys already know this. I own ServiceNow. We talked about this. I own ServiceNow. I brought it ahead of the number last quarter. Like the stock, stayed in it. Stock has done nothing but run for me. I mean, it's just done nothing but run. All right, so I'm looking at the stock now. It's off 15, almost 16 bucks today. It reported earnings. It beat on the number, beat on revenue. It's in this cloud technology space, so the space is hot. And the aftermarket trading, the stock's up 11 bucks. So even with the great news of them and what they're doing, even with all that going on, the stock's still not has not recovered from the sell-off today. That's what I mean by no follow-through. All right, that's what I mean by no follow-through. So if you brought that stock sometime today, the only shot you had that you might have made money if you brought the stock near the close when it was down today ahead of the number. But based upon what's going on in the marketplace, me personally, I wouldn't do it. If you're gonna play earnings, again, use stop losses. If you're gonna play earnings, use stops. But I would recommend, if you can, and I know it can be expensive, but if I were doing this, if I were you, I would hedge them more than I would actually use stops. And the reason why is the hedge makes you make money on the other side. So in other words, if you went long a stock and went into the number and it missed the number, the stock's going to gap down tomorrow. So when you go to sell it, you go to sell it on the opening, it's already going to be down to 10, 15, whatever points, or 3, 4, 5%. It's going to already be down. And then from there, it might even continue to sell off. So the reason why I say hedge it, buy some puts. And if you're really worried about it, look at some out of the money puts. Again, for those who don't understand what I'm talking about with options, this is not for you. For those who understand what I'm talking about with options, buy some out of the money puts. All right? And that way, it won't cost you as much. I'd buy some out of the money puts. I'd buy some probably that are going to expire within the next week or so. And the reason being is I'm just looking for the stock to sell off on the earnings. I'm not looking for a long-term move. And if this company misses earnings and it sells off, you'll make a little money on that. If not, if you paid 10, 20, 30 cents for that option, it expires worthless, what does it cost you? It costs you $300? Excuse me, at 30 cents, it cost you $30, not $300. I apologize for that. Is it 30? Yeah, God, I'm tired. I admit it, I'm tired. All right. Any other questions you want to ask me before we go? Again, forward looking, I'd be careful in this market. I'd be nimble in this market. I'd lock in profits. I don't know if what's going on in Europe and here is enough to lead us into another correction in the market. I got to be careful because, as you guys know, I personally think that half the country's in a recession, the other half of the country's doing, actually not even half. The top 10% is doing really well, the bottom 90% is in a recession. Right, that's my belief. So I was about to say, watch this market because we could go into another recession, but I still think it's not another recession. I still think we're in a slowdown right now. So I would look for that to extend, which means nothing more than volatility. Last note, for me, trading on who's going to be the president or not be president has never worked for me. I've never seen it work. One of the things I would say is, I see you, Lance. One of the things I would say is, in fact, when it was funny, I remember watching TV 4 years ago when Donald Trump became president. I remember watching it. I remember that the market sold off. The futures they bottomed out and sold off. And I remember looking at my wife and saying to her, I can't wait for tomorrow morning. I'm a buyer on the opening. She said, really? I said, yeah. I said, I'm buying everything on the opening. She said, why? She said, I said, just because Trump's president does not mean we're going into a recession and the market's going to sell off. I go, it's a knee-jerk reaction. For any of you that actually watched, that happened that night, by the time the market opened up the next day, the market had recovered from that, before the market opened, recovered from that sell-off, and it actually opened up and went higher. So I ended up missing it because missed it on the opening. I was trying to buy it on the sell-off. It says, can you go over your checklist that you mentioned that you look at on a daily basis? On a daily basis, what I look at is, you're going to laugh when I say this, Lance. On a daily basis, the first thing I do is I look at all my positions. I look at my positions. I also look at what I expect to report earnings. Then I go through and I look at the things that the stocks I track and follow. A lot of stocks I track and follow, I have alerts set up on my screens. And my alert basically is I said to you guys, I like to buy things when they're at or go through their all-time high or their 52-week high, looking for their all-time high. So let me back up. I look for stocks that are going through their 52-week high, but the ones I'm most interested in are the ones that go through their all-time high. So the stocks I'm looking at, when they go through their 52-week high, in most cases, that is their all-time high. So I go through and I look at those and watch and see how they're trading. And then I go and I check my commodities. And a lot of times I'm smiling. I'll turn on the financial channel and I'll turn the volume down. And the reason why I turn the volume down is I really don't want to hear, everyone's opinion, because as you guys know, you can go online and I can find 20 different opinions from 20 different experts. Bullish, bearish, up, down, sideways. So I like to just basically look at the market from my point of view and take out my own feelings, my own opinion, and move forward. I don't like being dependent on other people. I also hope that you guys do the same thing because, as I lovingly put it, and I had this conversation last week with a young man I used to, believe it or not, he's 42 years old. I used to coach the kid when he was in 8th grade, and we talked about the stock market then, and he remembered that. So he came to see me. But the thing that I look at on a daily basis is I'm really just, my whole thing is I want you guys to be able to actually look at the market yourself and come up with your own opinions. I don't want you actually depending on other people. I don't depend on anybody else. I call it going up into the tower. I call it going up into the tower, locking the door, turning my computer on, my machine on, making my money, and coming out of the tower. And I'm not predicated on anybody. I don't care who they are, what they are. I don't care what they look like. And the other side of the coin is, and let me just be upfront with it. Right now in our country, we have a lot of social unrest. There's a lot of, there's a lot of discrimination going on. Whether it's obvious or it's structural, where it's underlined and not seen. The one thing I can tell you about the stock market is, and when you buy and sell securities, they don't see your skin color. All they see is green. All they see is money. When you're buying a stock, the broker, all he sees is commission. When you sell that stock for a profit, all you see is the green that's going in your pocket. If you sell it for loss, you just see the money coming out of your pocket. No one cares what color you are, what skin color you are. You can actually generate wealth and no one's going to know. This is, as far as I'm concerned, this is the biggest secret that was kept from Black America. This is the biggest secret that was kept from minorities. And that big secret is that there's a whole bunch of money being made on Wall Street. And Wall Street did its best for years to keep it under wraps and keep it as their little playing game. All right? Another reason why Wall Street, as I call it, speaks in a foreign tongue. Wall Street speaks financial terms because they want to make sure that you think that they're smarter, that they're smarter than you, and that the only way you can make money in the market is to have them do it because you're not smart enough. Trust me, it's not that way. And by the way, just so you know, at your age where you're at now, I used to sit at Bear Stearns and listen to Larry Kudlow speak about the economy. And even though I was a youngster, I don't know how old I was, in my mid-20s, maybe late 20s, whatever the case may be, mid-20s, I can just say this. Even then, I was like, this guy's full of it. He's wrong. And I didn't even consider myself not even close to being the smartest guy in the room. I was just using what I call just basic business common sense. Your basic business common sense will take you a lot further than listening to some Wall Street expert tell you why he's so much smarter than you and how much he knows and how much you don't know. All right, don't fall into that trap. All right, I'm about to sign off. As you guys know, if I don't sign off, if I go longer than an hour, I lose the recording, and I always want to post these recordings. So I'm just looking real quick. Is there any other questions I can answer real quick? I don't see any questions. What was I going to say? So again, a reminder again, for everyone listening to this call, next Wednesday, I will not be on. All right, next Wednesday, I will not be on Wall Street Wednesday. Next Wednesday, there will be no Wall Street Wednesday. I have something to do with my family. I couldn't change the date. You guys are my family too, but I couldn't change the date, so I will not be on the call this Wednesday, next Wednesday. I do apologize for that in advance, but you guys can handle it. You'll be fine. You'll be making your money. So that's what that is. Any other questions? I don't see any, so I'm basically about to sign off. Again, I do apologize for next Wednesday. I also, don't forget, follow me on Instagram, follow me on my YouTube channel. And there's something else I was going to tell you, and I forgot that quick. So many things going through my head. All right, have a blessed time. Oh, that's what I was going to say. The Dodgers are world champions. Just wanted to make sure that everyone understood that. The Dodgers are world champions. I started to wear my Yankee cap today just to let you guys know I'm a Yankee fan. I cheered for the Dodgers. I live in Los Angeles. I'm a Dodger fan. My Yankees didn't make it. Now, I'd have had a tough time if the Yankees had beat Tampa Bay and I had to cheer for cheer for the Dodgers. I probably would have still cheered for the Yankees, even though I live in LA. Sorry about that, guys. But I didn't have to worry about that. All right, guys, have a blessed one. Appreciate you. Appreciate you guys, and I will see you in 2 weeks. Have a great one.